presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom, good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock, you and Tim Ord and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Welcome, folks. This is Tommy O'Brien. My dad's out today. I'm going to try and fill in those shoes for the hour, and we got a little volatility, man, in both directions right now. You got the S&Ps barely in the red, as we talked about on the market kickoff there. 18,000 on the NASDAQ, 18,121 on the NASDAQ 100. Just like that, though. You give up 100 and, what, 100? I mean, where were we? We were up at 18,100, 170 points. You trade lower, almost a full percentage point. A little bit of volatility ahead of the all-important CPI number out tomorrow morning. Now, remember, Fed's preferred inflation gauge is actually the PCE. So there are a few certain components of the CPI that don't have as large of an impact on the PCE, so be careful on some of those headline numbers tomorrow. But nonetheless, market, little volatility ahead of those important numbers tomorrow. S&Ps, there it is on your chart. We're about 25 points above the highs that we made at 115 this morning. You accelerated to that area at about 11:30, chopped around before we dip lower. You see the selling. At about 215, you trade from 5,050 down to 5,035, and we've been chopping around there for about the last hour. S&Ps off by 3 points. We talked about the NASDAQ 100, slightly in the red right now. You got the Dow up by 108 points, 38,856, and you got the Russell just continuing higher, man, up by 1.9% so far, 37 points in the green at 2,056. How about Bitcoin, man? You talk about quite a tear. 50,000, nice round number. The ETFs get approved, you spike to 49.4, you pull all the way back to a 38,000 handle, and just like that, you're back above 50,000. We're going to talk a little bit more about Bitcoin throughout the program as well at one point. Crude, just chopping around as well, near the top end of that range, $77 is kind of the top end. We're sitting at $76.95 right now in the price of crude. You jump over to the gold contract. Gold, negative by $5 this morning. Now, there's your daily. Okay, we talked about this one before. Quite the consolidation gold has been in. You spike 21.52, you pull back to 2,000. This thing's just been chopping around between about 2,000 and 2,100. You're negative by about $5 right now in the gold contract. You jump over to notes and bonds. As I mentioned at the beginning of the program, we're sitting on about 4.17. 4.17. Not a bad yield on the 10-year, man, as we've risen a bit from where we were. Odds of a cut, not exactly where they were, as we all know. A little bit higher for longer seems to be the trend there. We jump over to the dollar. And in the face of higher yields than the market may have expected, at least coming into the beginning of the year, we've risen all the way to 50% of the pullback, from 107 down to 101. We're right at that 50% mark at 104.13 right now for the DXY. Basically flat on the session. We talked about the VIX as well. Check out that volatility index. A little bit of a spike. The only thing I will say is we've gotten some spikes, and they have been short-lived recently. Each spike on the VIX, giving it up as this market just charges higher in the face of whatever gets in the way of this market, to put it lightly, right? All right, let's jump around to some of the stocks with action. How about ARM, man? How about Masayoshi-san, right? It's not stopping, man. This is a daily. This is a daily chart, folks. This looks like a 1 minute chart. You got some. It's a daily chart. You come into their earnings last week, gangbuster earnings, plow higher on Thursday, basically chop around on Friday. We closed on Thursday at 113.89. We closed on Friday at 115.21. So pretty much the same area. You got a nice green candle, but that's because you just dipped down to 102 before charging higher on Friday to almost 115 on the close. And then what happens today? Yeah. There's your 15-minute chart, man, as this thing takes off right on the open to 116 up to 164. If you're in the chip business, no matter where you are, It's a good time to be in the chip business, man. You jump over to NVIDIA shares. Still up by 0.6%. They gave up some of the acceleration they had early in the day. 746 down to 715, up to 725. Not bad, though, when you consider the run that this thing has had, of course, right? We're still sitting a week ago, not even. We were trading at, what, 680? On 6 days ago, we were trading at 663. You just traded to 746. Now, we want to talk about some bonkers. You get into the fundamentals of this company. NVIDIA is now at $1.8 trillion, folks. NVIDIA is now at $1.8 trillion. For some context, it's the size of Amazon. Just like that, man, as this thing has quadrupled in price. It's also, what was the other one? Google, I think. Yeah, it's basically the same size as Amazon and Google right now. I mean, they're in a sweet spot, right? You can't deny that. But at some point, these lofty valuations are what the future may hold. We've talked about this before. You got about $800 as the A to B, C to D. I did not think when I was putting this on the charts, when we broke above it on January 18th, that you would accelerate up to 800 in the span of no time. And we are at 746 as of today. Pretty remarkable. And NVIDIA up by another 0.5% with some volatility. ARM just crushing it. And let's check out some of those other stocks. Microsoft gives it up a bit. I say a bit, man. The run has been magnificent. No pun intended. Magnificent. Microsoft down 1.1% to kick things off. We talked about Amazon down 1.3% to kick things off. You jump off Apple for the week, down 1%. Pretty remarkable. You get the NASDAQ 100 right now, only down 64 points when you look at some of the accelerations of the biggest companies out there, right? Jump over to Netflix shares. They're down 0.2%. I saw Disney catching a bid today. Yeah, up about 1% for Disney, extending on some of the momentum they built last week. They still got some work to do, to put it lightly, right? Disney right now sitting at 110. Uber was a big one with some volatility last week, down about 2%. Just volatility everywhere on some of these growth stocks, man. We jump around. Salesforce down about 1.1% right now. Yeah, it's going to be an interesting one. All right, where do we jump to? Where do we kick things off? Let's see. What do we have pulled up? Yeah, we're not going to talk about that one yet. We're going to talk a little CPI. Where are we? I better get it up there. I think I have it up on this one. Forgive me, folks. Got a bunch of articles to talk about as we kick off the trading session. Yeah, come on. Shame on me. All right, you know what? We're going to jump to this one, because this is an interesting one. It'll give us a little bit of a teaser as we come into this first break. Interesting article from the Journal. Is this today? I think so, right? Yesterday, okay? Stocks are at records, but are they expensive? This is what everybody wants to know, right? They are at records. One of the things you do want to consider, I talked to my dad about recently, saying, you know, they're at records, but what did the S&P buy you when it was at its record 2 years ago versus what it buys you now? Well, you're above that level. That was only 4,800, first of all, okay? So you're already 240 points or 5% above where you were on the all-time highs of 4,800. But it's important to look at the acceleration these companies have had and the acceleration of the models in terms of the ratios I like to use, right? Tim Horton is ratios, man. He'll be on tomorrow, of course, as he is Tuesdays and Thursdays. The ratios, and we're not talking Tim's ratios, but we are talking ratios. We're talking economic ratios, whether you're talking about PE, etc. And interesting stuff when you take a look at some of these equities. That's what we'll look at when we get back, folks. S&P's barely in the red by 2. Filling in for Tom today. Don't go away. We'll be right back in 3 minutes, folks.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got the S&Ps chopping around right now. And we have the S&P. Oh, I think I just lost Steve. Apologies. Somehow, did I do that? Did we get Steve in there? There he is. All right. I know he's getting his chart. All right, folks. S&P's off by 2. NASDAQ 100 off by 60 right now. And I think he needs to repost his chart in there, Al. Or Steve, if you can as well. But what do we do on Mondays, folks? We talk to our man, Steve Rhodes. Now, folks, you can check out Steve Rhodes every trading day with his newsletter, Mastering Probability. You head on over to the newsletter tab. You can do it while we're sitting here chatting with Steve. Talk to him, I think it was a couple weeks ago, man. And we were talking about quite a price tag on this S&P, and we got him back. Steve Rhodes, good afternoon.
Hey, Tommy, how you doing today?
I'm doing well. How about yourself, man?
Doing good. Did you have any skin in the game on the football game last night?
You know, I had a little skin on the Chiefs. We got legal sports gambling in Florida now, baby, and I can't go against Mahomes, man. I mean, we're watching something pretty cool. As I know you love sports, man. I hear you talking in your show, and of course some of my dad's. And boy, just as a sports fan, quite an awesome game last night to watch in person, man. Just sitting here in my chair, right at my desk. I mean, just pretty cool. What were your thoughts?
Sure. No, that's really what you want, right? You want a great football game.
Totally.
You hate going to a Super Bowl. Can you imagine? You pay all that money and then it's kind of a blowout, right? So
I know. Yeah.
It's nice, just as a sports fan.
Totally.
Just nice to have a great game, but and we'll obviously we'll never know if that point after was really the difference, because things would have changed. That blocked point after attempt out there.
It's amazing. Isn't it amazing, Steve, how they work so hard all year, right? There's so much effort for all the organizations. We know from being, from playing sports, it's like you put so much into it, man. And these small little details, but when you're playing a one-game winner, it's just brutal, man. And some of the passes, right? Some of the drops, some of the penalties. I found myself saying, "Oh man, is that going to be the difference?" When they had the Chiefs had some tough penalties, man. So the whole deal, it was pretty cool, man. But yeah, it is
great game.
It is.
I was really following the golf as well. That was going on at the same time because they had delays and so forth. And the golf tournament went into overtime. So
cool.
I was flipping back and forth, but you and I were too young to have lived through the Roaring '20s. maybe it's going to be the new Roaring 20s out there.
Right.
So I thought we'd take a look back and try to understand what went on then, what might be going on now, what to be able to look for out here. So the Roaring 20s, that rally began. Well, I've got it beginning really in September of 1921 and lasting for 8 years into September 1929. Now, we've never seen the Dow repeat this same type of a move over a 8-year period of time. And when I talk about 8-year period, Tommy, it averaged 60% per year.
Amazing, man. I'm looking at that chart. Amazing. Yeah.
Right? Yeah. So, I went back to like 1896, just trying to find any period that came even close to this, and we didn't. But the important thing about this chart, because we're dealing with markets here that just seem to continue, as you say, they kind of defy gravity, continue to move to the upside. We had a similar market, I would say, back in the 1920s. The important thing here, Tommy, is we're looking at a monthly time frame chart, and those blue numbers at the bottom, those are showing consecutive moves lower out there. And we can see that once we got beyond once we got into 1925, all moves were 2 consecutive bars to the downside. So the buying opportunity, if one was not inside the market at that time, was to, in essence, wait for a 2-month pullback out there. And that's what's represented. And the red numbers up on the top, the black digits out there, which is really unusual, is 9 consecutive higher closes on a monthly basis. You just don't see that too often out here, probably more so in the NASDAQ, Tommy, than we would inside the Dow. But the point is, this was the 1920s, and even during that gigantic rally, we still had time periods where the market moved back for 2 years. So what I've done here is this is a chart that the folks over at Seasonix provide me. And this tool allows me, here I've selected 1921 through 1929, so we're going from January till the end of the year. And this shows how the market actually traded during that average 8-year period of time. And just simply, again, this just reiterates what I said on that first slide out there, is that we're not expecting, I wouldn't be expecting the market to just simply move in one direction. In fact, when you get a pullback of 2 months, it's a pretty nice pullback out there. Now, this is a weekly chart. And this weekly chart takes us back to September 1921. I wanted to understand what kind of pattern was present when the market was making a low. And the market was generating what I refer to as a Rhodes Momentum Indicator bottom. As you know, that's something that all subscribers get access to. I teach people about this. You don't necessarily need the automated tool like I've got on my charts in order to identify these. What we can also see here on a weekly basis, we talked about the monthly charts forming 2 consecutive monthly closes to the downside, and that set up the next rally out inside the markets. Here we can see that on a weekly basis, we had a couple of different Rhodes Momentum Indicator bottom patterns out there. Now, how important are those bottoms? If I just take a bar chart, and I go back into, this starts in the 1930s out here. If you take a look at the bottom out there, you'll see where these patterns actually form. And they identify pretty significant buying opportunities out there. So I'd say that the weekly bottom patterns, now that just takes us from the 30s into the 50s out there. So if we go from the 60s, 70s, and 80s, we can see this pattern here. That's also formed. It's a very specific formula out there. So it's not just the matter that the pattern forms. It's a very specific formula that gets confirmed with a bullish or and a tops bearish reversal candles. Here, if we take a look at the last 25 years, we can see that this signal has been present at every major bottom. The most recent one being the October 2022 weekly Rhodes Momentum Indicator bottom pattern for the Dow Jones. Now, I don't think it's coincidence, but when we take a look at the October 27th, the most recent bottom that we had, Tommy, on a daily time frame, that was also a Rhodes Momentum Indicator signal that had identified that bottom. So this is a really great pattern for folks to learn. It's applicable to all time frames, even intraday charting out there. Now, even though when I take a look at what's going on right now in the Dow, it's up 92 points. And here, the Dow itself, so just focus on the Dow actually has a daily topping pattern out there. It happens to be the Rhodes Momentum Indicator top. And it is present, Tommy, on the daily equity future contract, the daily cash index, and the Dow Jones Industrial. So everybody can really follow this. On the Dow Diamonds, it's 387.78. That's the number to watch. If price closes above that, this pattern gets negated and really talks about a strong further move to the upside. upside. Inside the cash indice, it's 38.7, 38.62, and on the equity future contract, 38.892. Those are the levels to be watching out there. If we take a look at the Dow's weekly and monthly charts, that's what we have here, Tommy, on the right-hand side. They're in what I see just a breakout bullish condition. So what this tells me that if we do get some kind of top and a pullback inside the Dow, that the like a two month move lower is likely not in the equation as we speak right now. So what I want folks to really understand is that, and this is even since the October 2023 bottom, Tommy, and how these numbers just pop up. This is a daily time frame charts. Here, the pullbacks have each been 2 or 3 consecutive moves lower before price moved higher out there. So today might just be. Well, I don't know what this was taken yesterday, so I don't. It's clearly we're trading higher inside the Dow, but
well,
so that's
as you said it
for you.
I got the diamonds at 387.87, so we're right there, man, which is pretty amazing.
Yeah,
Steve,
so
I appreciate.
You bet.
I appreciate it. Folks, head on over. Mastering Probability is right on the front page at TFNN.com right now. You can check out Steve's outstanding newsletter for $149, and it comes with a 30-day money-back guarantee. You can't go wrong. Steve, thanks so much, man. We look forward to the show tomorrow.
Take care.
Take care. We'll be right back, folks.
To be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps pretty much right where we kicked off the program, right? We're negative by 2 points. Pretty interesting. We got 30 minutes of trading left until an all-important CPI number tomorrow morning. Not sure you'll see anything too dramatic, but as we know, man, we've had some fireworks in both directions already today with the S&Ps just off by 3 points. NASDAQ 100 off by 66. Always great talking to Steve. Check out Mastering Probability, folks. Outstanding newsletter. Steve puts so much into that letter every morning that he puts out for subscribers, and you can get it for $149. And if you don't like it, you don't think you use it enough, it's not your trading strategy, whatever it is, folks, you cancel it, you get a 30-day money-back guarantee, you pay nothing, and I guarantee you'll get something out of that for the month, even if you don't think it's something that you're going to keep. So check it out, please. The reason why I bring it up is, man, we got some numbers at some lofty levels as we come into a possible roaring 20s. I love that idea, man, especially because Tommy's 3 years old. Let's get the roaring 20s going right as he comes into being in existence, right? Not bad. It is so remarkable. You hear about the roaring 20s, and here my son is born in the 20s. Born in the 20s. Born in the 20s, not 1920, the 20s. 21. Made it into 21. Pretty remarkable. Okay, so we get the market sitting at almost 18,000 right now on the NASDAQ 100. I referenced this article at the beginning of the program. Let's talk about some of those ratios, the simplest of ratios, when you're talking about where these stocks are, where they've been, and how they're priced. Okay, stocks are at records, but are they expensive? These models have an answer. Well, I don't know if they give you an answer. They give you some information, and it's on you to provide that answer, folks. If the answer was out there, everybody would have it. Investors can learn from 5 popular valuation models. We're all pretty familiar with these models, okay? We're up 5% to start 2024. We're barely a month in, right? 10th record of the year is what we just hit. Dow Jones is up 2.6%. The S&P is the one up by 5. NASDAQ's probably up even more than that, right? Let me make sure, because I'm getting a little bit of feedback. Make sure I'm all right. I think I am. Yeah, okay. And let's just get into the ratios. Price to earnings. Now, you got 2 numbers on here, okay? In the black, you're using a trailing number. Now, trailing numbers are great because there's no fudging, right? Those are the numbers they reported. There's no estimates whatsoever. But if you believe estimates, the next 12 months are probably a more critical valuation level in terms of, as we all know, it's not what, hey, you have done for me yesterday. It's what you're going to do for me next quarter when it comes to public companies. And these estimates, okay, this is their 12-month forward earnings per share. That's put out by the companies. And most times, folks, the companies are trying to put out under promise and over deliver, right? Now, they miss all the time, all right? They miss all the time. What just missed? Disney just missed, didn't they? They missed on revenue. No, excuse me. They didn't. They beat on profit. They missed on revenue, and they missed on subscribers. They miss, okay? But nonetheless, when you're talking about where you are, it's a great number to see where we are. Where are we versus the last 12 months? Well, the PE ratio for the S&P 500, price to earnings, over 5 years, we're sitting right almost where we were coming into COVID. We're sitting at 24. We were at 22. Well, that doesn't seem so bad with some of the estimates that are priced in right now for the growth of AI, okay? The forward earnings, we're only at just above 20. Well, we were way above that when we got out of whack with the market, but we were almost at that price level coming into COVID. I would say that right now the growth prospects for the future are probably more enticing than they were when we were coming into COVID, even though that time in our country, in the market, was great. Okay, but you didn't have the type of promise you might get. I mean, I think Microsoft said 6% of their Azure cloud growth came from AI by itself. I wonder what that put into the earnings alone. That type of 6% cloud growth from Microsoft, who knows what that added on a multiple basis, okay? We could try and figure it out, but it's a big number nonetheless, okay? Now, where are these in comparison to history? They talk about price earnings, all right? Based on trailing earnings, we're sitting at 24.18. The 10-year average is 20.36. Now, it's been a heck of a 10 years, okay? We're dealing with numbers here that are just bonkers because this market has been on a tear, right? I mean, you're talking about going back 10 years to the beginning of 2013. We just went from 1,500 up to 5,040. So you're comping out against quite a market run, all right? But it's not as outlandish as I think a lot of people would think when looking at the run that we've had, okay? The index's forward multiple, the one we were talking about in yellow here, is just above 20. That's the first time in 2 years. The longer-term average for the forward earnings per share is almost 18, and we're only sitting at 20. What if we're coming into a period like that of the roaring 20s, okay? it's not as lofty as one may think when you look at some of these numbers, okay? Now, price to book ratio, where are we? We're not that bad at all. The S&P 500 price to book ratio is not even back to where it was at its highs, and you got the 12-month not even back to where it was at its highs. Now, the important thing to consider here is you're well over where you were coming into COVID. Okay, same thing with the price to earnings. But similarly, you're not quite back up to those lofty levels that we were at when you were reaching those all-time highs prior. Okay, and that's dividing a company's stock price by its book value. Basically, your assets minus liabilities is your price to book ratio. Okay, equity risk premium. When you're using 10-year tips and forward earnings, 10-year treasuries, and trailing earnings. We're still sitting at 3, okay? The trailing number is well off that number as well. Earnings yield is computed by dividing a company's reported or projected earnings over the year by its stock price, okay? Comparing the trailing earnings yield with the 10-year treasury yield show the S&P 500's equity risk 0.7 percentage points, the lowest level in about 2 decades. The lowest level in 2 decades, man, crazy. Price to earnings growth ratio, right? I mean, man, keep all of these on your radar for the future, folks, because just bonkers stuff was happening as we were coming into COVID, et cetera, right? Earnings growth ratio, I mean, you got some yearly comps that were bonkers, which is why that's probably, no, you get into August. Nonetheless, you see, not that outlandish compared to where we've been. You back it up even to January of 2023, right? 1.72 times. We're only sitting at 1.48 times. It's all going to come down to the growth of these companies, okay? But if you believe what AI may hold in terms of productivity, profitability, really productivity, right? Doing more with less workers, that is like the holy grail of corporate profits, and it seems like that's what AI is the holy grail of. And then you get into the CAPE ratio. So this is Shiller, right? Yeah. Cyclically adjusted price to earnings ratio. Okay, now this is where you get some adjustments, right? You get in and dividing the stock's current price with its average inflation adjusted earnings from the previous 10 years. Point being, man, you can see we've got up to these levels before. Now, when we got up to this level, what is that going to be, though? That's going to be like 1939 or something. 1900s here, 2000s here, okay? You did get all the way up to 45 times before you pulled back hard into the collapse of 2008. But 2008 isn't coming, folks, okay? The commercial real estate crisis is coming, and we'll see if we can get over that. We'll see if the Fed might be able to cut rates quick enough to stem that, because that, I bet, is what they look at most of all, because if they can cut those rates, then what happens? It's easier to refinance those properties, but guess what? There's a lot of people not in those properties no matter what, so the value is still going down. It'll be interesting to see if they still come back and refinance those. All right, folks, S&P's off by 1. You get the Dow up by 130, the Russell up by 1.95%. Stay tuned, folks. We'll finish up this conversation on the other side. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's down by 3 as we just chop around. 18 minutes of trading left, as I mentioned, right? 8:30 a.m. tomorrow, CPI. I'll be on the air at 9 o'clock as we digest those numbers, of course, tomorrow morning. I was on the air this morning, man. I don't know what got me. I had a very tame night last night. I was up a little bit later than usual to watch that game. How are you going to turn that game off? And we do have legal gambling now in Florida. What's interesting is it's always like some type of makeshift deal, right? They got legal gambling for the Hard Rock. You got Hard Rock Bet, but you can't deposit money because the credit card processors want no part of online gambling, probably, okay, as this just unfolds. This has kind of just happened in the legal frontier. So you can't even deposit that. You can do it in cash, though. At the casino, it's one way, of course, but you still can't play online poker, which I think is the biggest farce of it all. Because I tell you, folks, if you go into a Hard Rock casino, I'll give you a quick example, all right? I digress, but if you're listening to this program, you're an investor, you're a trader, and you may be a gambler. Because if you're a trader, you're a gambler. You're just gambling with a positive expectation of future results, which people associate gambling with negative expectations. Because if you play any casino game, you're playing a negative expectation game, which means you play it long enough to reach a sample size large enough to hit the averages, you're going to lose money, guaranteed, which is why the house always wins, right? But for poker, the cheapest cash game poker that you can play in a casino in the Hard Rock has blinds that are $1 and $2. And normally, you play with about 100 big blinds. So the average buy-in for that game would be about $200. It's pretty lofty, $200, okay? People might want to go and play what? You go play blackjack for $5. Maybe you bring $50. You bring 100. You can have a good time for $100. Now, good luck to you in the Hard Rock, man, because you can't find $5 blackjack in the Hard Rock. They got a monopoly on gambling in Florida, but I digress. Point being, so I go in there the other night, a couple weeks back, to play some poker, as I do occasionally still. I sit down, just want to have a relaxing Friday night, social hour, hang out, maybe make a little bit of money in the process. I sit down. We've digressed from the gambling game to this, but it's important, man, because I don't understand how all these states are doing sports. Well, I do, because it's all about the money, okay, and everybody wants to sports gamble. But from a rights perspective, it seems absolutely absurd, as it happens sometimes. Because online poker, you can go play a $5 tournament if you want. You can play a $2 tournament. You can play a $1 tournament. They even got 10-cent tournaments if you want. And sometimes it's just the thrill of the game, man. I like sitting down playing an online tournament for $2. You know why, folks? Because I like playing games. I like playing card games that don't even cost any money, right? The competition of things. Point being, you go into the Hard Rock in Tampa. I'll give you a personal glimpse of myself. So I bring $500 is what I do. This is the cheapest game they offer. Think about this, okay? I bring $500, which is probably on the low end of what you can bring in that game if you want to play. I sit down with $200 the very first hand, okay? So I sit down with $200. I have $200 in red chips, if you know those are $5 chips. Sit down with those, and I have $300 in green chips I got. I put those in my pocket, so maybe I can top up if I lose some money. The goal being, though, I'll sit down with $200. That's a good stack. Maybe I'll keep that $300 in my pocket for as long as I can, right? And very first hand, I lose $150. I got the money in when I was ahead, folks. Either way, I'll spare you the details, right? But a pretty simple hand, plays itself. I lose $150. Great way to start. That's the way the game goes, though. The point being, it's a very expensive game to gamble in person, and that's why online poker should be legal, even more so if you have sports gambling in particular. So what happens is I bring the $300. You're allowed to buy in for $300 maximum with that game. So say, I might as well buy in for $300 because all I got's left, basically $350. So I buy in for $300, and I catch a few hands, and I end up running that up to $850 or something like that. The point being, it is an extremely expensive game to play the cheapest option of no-limit hold'em poker in a live casino. And the reason why is because they got to make it worth their while to rake that game. And they're also raking $6 per hand maximum. Now, it's 10% of the pot. So once the pot reaches $60, they take their $6 as their rake. I think they even take $1 for the promo pool as well. So they're taking $7 off the top every time it gets to 70 or 60. But point being, folks, online poker, the greatest thing, the reason why I fell in love with poker is because I could play for very little sums that weren't stressful. You go play a $5 tournament, you play a $10 tournament, maybe you do this, right? It's the cost of buying a movie ticket or something. It's a shame that you got to go to the Hard Rock and risk life-changing money just to play a little bit of poker, because no matter how cheap you buy in at, it's literally life-changing money no matter where you're at. When you're talking about leaving with $850, leaving with nothing, buying in for $500 within the span of a heartbeat. So hopefully that changes. Nonetheless, I was up, couldn't do the program. I don't know why. I just was up later than usual, just didn't feel well. I had a few extra things to eat last night. Maybe that was it. And so I struggled this morning. But I feel great now, thankfully. But I was doing that program, and we had the market trading basically flat. We've traded up, we've traded lower. Nonetheless, we digressed a bit. Let's get back to the market. What do we have going on, folks? We still got earnings going on. Let's take a look at some of the companies that are coming out during this week, okay? And it's interesting. We talked about how these companies are valued, right? And they make that comparison at the end of this story from the Journal, okay? And this just talks about some of the companies we got coming out. Tuesday, Airbnb, Coca-Cola, Marriott, Shopify. Wednesday, you got Cisco, Oxy, and Kraft. Thursday, you're going to get AMAT, Deere, and Dash. Those are the headliners out there, okay? 3/4 of the companies have reported earnings above consensus estimates, as I stated, okay? Most companies are under-promising and over-delivering. You want to be able to beat. You have to be able to beat is how you probably want to look at it as a public company. The 5-year average is 77% of companies report earnings above the estimate. Now, consider that when you look at those 12-month forward earnings, okay? It's interesting, though, that they're not beating by as much. Companies in aggregate, okay, have reported earnings that are 3.8% above estimates. The 5-year average is 8.5, man. So they left themselves some room, and they're beating, but they're beating by less. So be careful of that one as well. Now, companies are on track to report quarterly earnings 2.9% higher than a year earlier. That's this go-around. And as we mentioned prior, they talk about the 12-month forward here. Earnings per share is sitting at 20.3. 5-year average is 18.9. It's the first time it's been above that level in a couple years where you get the forward price earnings ratio topping 20. Keep those ratios on your radar, folks, because it's important when you're talking about realizing when things might be getting a little bit out of whack. But yeah, those are the companies we got. So it kicks off tomorrow. Airbnb, Coca-Cola, Marriott, and Shopify. And we jump around. Let's check out Coca-Cola. We had Pepsi disappointing last week, but they're a different animal than Coke. Yeah, Pepsi disappoints last week. We get some of that back today. Look at that, up by 1.8% today for Pepsi. Coca-Cola shares, they're not the same as Pepsi, man. They make beverages, Coca-Cola, and quite a run. 51 to 60 for this equity from the October lows. I mean, a 20% run on Coca-Cola over the span of 3 or 4 months, man. You don't get those often, to say the least. We jump around to, I think it was Airbnb, correct? Yeah, Airbnb. Yes, they're out with their numbers. Take a little bit longer term look at this equity. Yeah, not bad, man. Not bad. You've been shopping around since, look at this, right? You had 140 was an area of kind of support going back to where we were in 2022. And what have we done? But just coming up to this area right now, this is a critical area for them with their numbers tomorrow, man. Airbnb, you're up by 4.3% today, though. Look at these markets, man. Look at that acceleration. Trade at 157, you're at 154. You jump over to the Analyze tab, and they're looking for about a $12 move priced in for their earnings. Yeah, it does make sense you get some volatility when even today you're moving 4.4%. All right, folks, one more segment. We'll finish up the conversation on earnings. We got a couple other news articles to touch on. We'll be right back.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Remember, CPI 8:30 tomorrow. I'll be back on the air live at 9 o'clock. Should be an interesting morning, interesting day, as we usually have the case right now. S&Ps, after all of this roller coaster, up and down. We're within 1 point of flat right now, but pretty interesting. You got winners and losers, man. As our man Basil Chapman would say, maybe we got a little bit of a rotation going on, as you have many equities with big wins, big losses, and they all flatten out to have the S&P within 0.1% of being flat at 5,040 right now. NASDAQ 100, you're in negative territory by 72. The Dow up by 143. Jumping back to some of the equities that are coming out with their numbers this week, we talked about DoorDash. Thursday? When are they out? They are out with their numbers on Thursday. DoorDash, okay? It's been quite a run to the upside, man. See no weakness on this equity whatsoever right now. Look at their last earnings, charging higher. We were at $70 in their last earnings, though. We are at $120. You always want to keep expectations in check in terms of where they are, especially if you're coming into an earnings event. And we see some of those expectations are going to be pretty lofty for that company, DoorDash, as we're trading basically flat. I say basically flat. On a day like today, only down by 0.8%. This market is everywhere. DoorDash coming into their numbers this week, but boy, that is a strong chart, to put it lightly, right? I mean, you're going back to the lows of $50 at the beginning of last year. Yeah, $50 at the beginning of last year, and we're trading at $120 for DoorDash. A little bit of a pullback into the October lows, and then you just plow higher on their last earnings. But what have you done for me lately? They're going to have to live up to the expectations. They had $70 expectations 90 days ago, right? Now they got $120 expectations right now for DoorDash. We jump over to NVIDIA, speaking of expectations. NVIDIA shares basically flat. For them, $1 is flat, right? At $722 off $746. I don't think it makes sense that NVIDIA is worth as much as Amazon or Google. Completely anecdotal type of comparison, right? I feel like things are getting a little bit out of whack, though. And that company deserves all the success they have. And I would not be selling on a longer-term basis. But boy, Amazon, Google, I don't know. They are quite the force to go against as well. Folks, thanks so much for tuning in. Always a privilege filling in. I'll see you tomorrow at 9 o'clock in the morning. Have a great night. Have a safe night. I'm coming back for the 4 o'clock update. Thanks so much, folks. Have a good one.